Good morning, everyone. Today I'm joined by Pav Hundal from Swyftx, lead market analyst there. Mate, thanks so much for coming on the show.
Thanks, Tom, mate. Happy to be here. Yeah, we're just saying we've just been two emails in the night type of people for a bit, so it's good. It's good to put you on the camera on the face, mate. Good.
Yeah, dude. 2 emails in the night. I'm going to borrow that. Let's just get straight into it, dude.
Let's crack it.
We've had markets react strangely. I mean, markets react well, so I'm not complaining. But I think everyone was confused about whether or not to be like kind of turbo bullish or turbo bearish there for a second. We had Israel-Iran, the whole geopolitical uncertainty kind of play out. Bitcoin's 4K off all-time high at 107 something right now. So clearly,
What a time to be alive.
Risk is still on the table.
Yep.
Is it just that markets are just unbothered by the idea of this conflict? Like they just see the two as weaker and we're just full risk on mode? What's your read on the current setup?
It's been a very interesting 2025. Like I think this is one of those years where you could be a hedge fund, you could be just a personal investor. You're both getting kind of caught left-footed twice, I feel, this year, between tariffs and now obviously the geopolitical sort of boilovers that we've seen. I think what you're seeing basically priced into the market is it's purely sentiment. Like we're in a headline risk environment, which I think everyone's probably heard to death and is probably sick of just even that as a catchphrase, that it's a headline risk environment. I know I am. But even like myself, I'm trying to understand like, all right, well, that's great that we can say we're in a headline risk environment, but how do we measure that? So, you know, just even looking at simple things like Google trend data, you can see what are people searching right now to sort of anchor how much they care. And if you go back in the last 90 days, the amount of weight that we put on the tariffs, for example, when we compare it to what was happening over last weekend, it was like a 10x, you know, in terms of how much emotion people were putting behind what was happening in the whole Iran-Israel issue and the US coming in. And obviously, why wouldn't you, right? It looks like World War III, smells like World War III, so everyone started preparing for World War III. It was actually pretty funny. Actually, one of the other sort of analysts that we chat to sometimes on Twitter from CCI, Sam McDonald, he's got a funny thesis that you know, when you look staring down the barrel of wartime, you know, if you're thinking about your shitcoins and your Bitcoin, you got 2 options: buy and you look like a hero because you bought the dip when no one else did, or 2, don't buy because you fear that nukes are coming. So you know, really, what are you worried about if we're all dead anyway tomorrow? So, so like, I don't know, that's just a bit of tongue in cheek, but like, yeah, totally just the, when you look at the macroeconomic backdrop, like, you know, we do quite a bit of work just trying to measure, because it is more of an art as much as it is science. Like, where do we sit on the tolerance curve right now for like wanting to be a risk on to wanting to be a risk off for the markets broadly? And all the data points to the fact that we're probably closer to a growth cycle than anything close to a recession. Like, it's just not in the data. I'd love to see some evidence that sort of puts us there sooner. And I've had to point to something just in traditional markets, like overnight, and I think the previous night we saw the NASDAQ and the S&P reach new all-time highs. And what's really important when you look at you know, equities as being a proxy for something like crypto, you know, we all talk about Bitcoin and we talk about ETH and you know, all the others and total market cap 3 and things like that. You can look at something called the Russell 2000 in the stock market, which is more of like your smaller caps as well. So understanding that there's market demand for you know, the small caps in the stock market, that's a nice little proxy for understanding what the risk tolerance is from an equities perspective. But again, crypto is just that another layer, right? Like if you're wanting to access volatility, it's where you get it in spades. So yeah, I mean, that's a long way of saying that the market's responding, and you know, people are saying, should you be turbo bullish, turbo bearish? I feel like it's a bit, it's not a coin flip at all. Like I do think we go higher from here. It's like it's all-time highs, but how we get there could be a bit choppy from here. Yeah, it's a really, really interesting time.
Yeah, all-time July. Let's go.
All-time July.
It's going to happen. But longer term, I think that people have this idea, like now that I think that this conflict has boiled down a little bit, outside of that, just outside of like geopolitical stuff, more macro, like things have aligned in a way that even just today I've seen Ari Paul come out with just essentially saying like we're we're on here. In so many words, in a way that you can as like an investment manager. But yeah, looking at dollar strength weakening as well, like just that general kind of risk on sentiment really returning back of like, oh, okay, so this is going to be a lot of the stuff that we were really freaked out about has turned out to be nothing burgers. Things aren't as bad as we thought they were. Let's roll the dice, basically. I was interested in getting your take on, because you mentioned total 3 before, and that is a terrible chart to look at. If you look at it, like I think people have been calling for an alt season for I don't know how many, ever since like 2023, basically. Like, oh, Bitcoin dominance right. Up, BTC, like ETH BTC, trust me, we're going to have an alt season. And yet it's been really isolated into small pockets of the market. You've had things like Hyperliquid absolutely rip. You had meme coins go off in 2024. But all of those assets sold off, I mean, excluding Hyperliquid, but meme coins and a lot of like the hot metas, AI agents lasted about 2 months. But like these things ran up and then sold off, all while Bitcoin is just charging along. So how do you view total 3 market cap, quote unquote? I fucking hate the term alt season now. I hate it. I see it on the timeline. I'm like, please don't say alt season. But like, how do you view the idea of an alt season? Are we going to keep seeing these isolated pockets of like deep value plays play out, or do you think we actually get like a rising tide of just throw money at dog shit? Like what do you think?
It's a great question, and I think everyone's got an opinion on this, but mine is more of like let's just look at human psychology. Do you think if there was an opportunity for people to be more greedy, they would take that opportunity? If you believe yes, then alt season is coming. It's just a case of when. So again, you got to tie into the idea that if you want an environment where you throw darts at your wall to pick coins that are just going to go because everything goes for about that 2-month period, like that's historically what it's been. What do you need the underlying conditions to look like to allow that to happen? You basically need everyone to feel super confident. You need them to already be winning. So already winning, when we're looking at crypto, it looks like Bitcoin racing and charging to some crazy valuations. That sort of attracts the eyes and ears of people that are like on the fence to maybe jump in. It's an unfortunate reality, but many in their first cycle probably it's the exit liquidity. Like that's just how it works. It's a zero-sum game. So what else does that look like? It looks like Ethereum and Solana soaring to high valuations too. So until we see an environment where everyone is winning on their base case investments, I don't think we see like a sustained altcoin alt season, because essentially an alt season is it's very simply a period of time where everyone's just thinking this is too good to be true. Like, why would I sell? You're a loser if you sell. So I think we've seen sort of shades of what that looks like with the meme coin cycle that we saw at the end of 2024. The difference is the amount of money coming in wasn't proliferating fast enough to keep that ecosystem running and keep it going. And just the general, there was just a misalignment in the macro too. So, we saw a lot of sort of blockers come in towards the end of last year too. The whole tariff thing spill over in February. So it just wasn't safe enough for everyone to wanting to keep punting on their meme coins. So answer is, yeah, it's coming. I don't know when. If we're trying to tie it back into like what are the themes and macro factors that we're seeing in the market right now, I'd like to say the second half of this year. That's a very broad and stupid statement just because we're already close enough to say that. But Q4 has historically been a period where even just broader markets, they come back after a bit of a break during the August-September period. There's usually a bit of a recess across many investment firms, etc. So, it all ties into a bigger picture. But yeah, I still think it's coming. But it just requires a few more checkboxes to be ticked, I think, for it to like come and for it to like stay and keep going. I still 100% agree with you. Things like Hyperliquid, things that are seeing relative strength right now, they're going to keep performing. I still think as much as people hate it, probably meme coins will continue to lead as well. You just can't ignore it. They have honestly some of the best tokenomics out there, even though they are a meme. But at the end of the day, some of the projects you see out there, I mean, how are they not a meme as well? So,
yep.
Yeah.
Very good point. Like you look at it, you look at the cap table and what they're offering and the valuation they launch at, and you're like, Well, that's the thing. Like meme coins were very much launched as they became popular as the antidote to like the high float, low FTV.
Exactly.
Sorry, low float, high FTV.
Yeah.
Other way around.
Yep.
Thing of just shit. We're not going to make any money on the new data availability chain. We have to go to the trenches, and this is where we can run our own book, kind of thing.
Totally.
But breaking that down, looking at the difference between like Ethereum and Solana. So Solana, I think it didn't hit an all-time high price just because of emissions, but it hit an all-time high market cap back in November last year. ETH, on the other hand, has been dragging quite a bit. It's probably the most popular to hate on asset on crypto Twitter in terms of the fact that it's sitting now at similar prices that it was in like 2021. I'm like,
yeah,
guys,
it's pretty funny.
what's happening? What's your take on why ETH has been so... there's almost been the meme of like every time ETH rips as other assets are pushing up, everyone goes, oh, fuck, nuke incoming. Like every time that ETH does that final run, it does that laggy kind of run behind everything. Everyone's like, that's not a good sign. And I think people have been saying for a very long time now, like, oh, it's going to be a hated rally. When it happens, the ETH pump's going to be magical and everyone's just going to have their faces melted by it. But what's your read on why it's been so slow to outperform and whether or not we do get one of these hated rallies?
Crypto is heavily sentiment driven, and I honestly, back in 2024, was also looking at ETH to say, all right, if we're looking for what's going to be the most hated rally, because what does that actually mean, right? You've got to boil that down. Well, a hated rally basically means it's similar to Tesla, like in 2021, was it? It was like the most shorted stock on the stock market, and because of that, the nature of a short is when you unwind it, you basically market buying. So it just creates this ongoing, just puts the thrusters on and just allows the market to eat up the order book to the upside. And that's all we're talking about here, like short squeezes. Like you kind of want some emotional conviction that people are like, oh, I can't possibly go any higher, right? So I think if you're an ETH bull, you kind of want to see that it'll be the most hated rally because it'll probably move the fastest. But I think it sort of just ties back into, again, the landscape that we're in. Like we talked about Total 3, or even just like Total 2, I guess, if we're talking about ETH here. If we don't see like market cap breakouts in a significant manner, like you'll never see, I guess, Ethereum breakout with any sort of propensity. It just hasn't had the time and space to run. But at the same time, you got to think about the people that are in the game right now. They're people that probably bought ETH circa 2K to 4K USD. And what they're seeing is Solana move to the upside for all of 23 to 2024. And again, because we haven't seen the market cap really break to new all-time highs, what you've seen in 2024, let's just pencil in on 2024 specifically, you're just seeing people finally sell that capitulation event, finally sell their ETH for Solana to then go throw it in pump.fun. Like, I think that's literally what we saw. Yeah. And that's because, again, think about the mentality of someone who invested in ETH. I'm not saying this is all of them, but it's like something I could perceive as like how the market's thinking. ETH hasn't performed. All my mates made so much money on Bonk or Shib or whatever. Not Shib. Bonk or Mog. Like some of the more, I guess, blue chip meme coins. So again, you just have this mentality of, well, I've got to chase the next best thing. These things have run too much, so I've got to go in the trenches because I've got to work hard for my money, right? So you see a whole bunch of people selling ETH for Sol, and if you compare like ETH versus Sol on a chart, you can see that pretty easily. Like the relative strength was with Sol all of 2024. So if you think about, no new money, people transferring their wealth over to Sol and then go punting on meme coins, it kind of sums up, I feel like, a lot of what we've seen. And I know that's a bit of a generality, but that's my belief. So I think when we do see the market come back, and when the market comes back, I mean, we get new people coming into the space, old investors feeling confident enough to put money back in. And I do think that comes post all-time highs. That's when you start to see, I think, proliferation of that whole ETH ecosystem. Like we've seen, I don't know, like you still things like Aave performing quite well on a relative strength basis as well. So it's not like ETH is dead. And you can't ignore, the World Liberty Finance and what what that family's doing. I mean, if you're crazy to think that the president of the most powerful country on the world, if his family's getting involved on on a chain like ETH, which, you know, if you think about the broader scheme of things, is a pretty small blip in the investment world. Like that, they're not going to make it successful because it's the president. Like he just literally says a tweet and people follow what he says. So I think you'd be underestimating ETH. Will there be like better plays out there? 100%. There always is. Like last cycle, you could have said Sol was better than ETH. This time, something else will be better than Sol. Like it could be Sui, it could be Say. I don't know. But yeah, I think ETH. I want to be a cheerleader. Like I think it'll be at all-time highs because I feel like we kind of need that for the next wave of adoption to kick in and for us to see that sort of growth that we all benefit from. Like all our bags grow. But yeah, it's definitely been a rough ride. Again, like you said, it's the same price as 2021.
Yeah, well, that's the thing is it's like a lot of investors that I know, particularly on chain, kind of see Solana as the casino and ETH as the bank. Of like if you were you want to run up some money, you can go gamble on Sol. I mean, there's plenty of opportunities in ETH memes as well. Like if you bought Pepe or Mog or any of those kind of things, 2024 and held for most of it, like you're still fine now. With like the Ethereum Sol dilemma, there's just plenty of deep value, I think still to be had on ETH. Like if you look at the actual infra that's available there, it's still miles ahead of Sol. I think there's still a catch-up play to be had with Sol. I think there's lots of good DeFi coming up just about now. You can see stuff on Camino, Jito, these kind of projects are actually pushing. Yeah, they're breaking that narrative of just like, oh, Solana's a meme coin casino forever. I think there's plenty of good tech to be had there. But yeah,
I agree. I think one of the takes that I heard that I quite liked is you got to almost think of the meme coin frenzy as a bit of a stress test on the network. Like if it can handle that, it could probably handle a bit more on the DeFi side as well. Like it's just because again, like the one thing Sol got criticized for was network downtime last cycle, right? So we haven't really seen that play out this time around, which is good.
Yeah, no, it's fantastic. It actually there was like in early 2024 when Pump.Fund launched, there were a couple of times where it was like network congestion. But it appears to have been fixed. Like there's more coins being launched in like the last couple of months than there was ever in those early days when it was struggling with congestion. So there's more network activity and it's still holding up just fine. So hopefully that continues for my bags in particular.
Mine too.
But yeah, you'd hope so.
Yeah.
But yeah, heading into the rest of the year, people kind of throw around the M2 money supply as this like kind of confluence factor of, oh yeah, M2 money supply, that's great. What's your read on the whole M2 money supply?
I'm glad you brought this up. Yeah, I'm glad you brought this up. It's legit. Like it definitely is a big part of, you look at the heuristic of crypto, like it is definitely a correlation there, like leading, lagging, however many days you want, like it's there. And when you think about the value proposition of something like Bitcoin, well, it is meant to be that hedge against, well, if currency keeps debasing, well, you need hard assets. So hard assets, Bitcoin's one of them, property's another, gold is another. But I think again, when you sometimes looking at the fundamentals, but also having like a little bit of that trader's mindset, if you're trying to find edge and everyone's talking about M2, you've got to start thinking outside the box of like, okay, well, we all know M2 looks good. It's looked good since, let's call it January this year. Depending on how, there's other ways to measure too, like even just like central bank balance sheets, etc. But what else can you do to, I guess, find a primary driver behind the market? And I think a lot of people aren't looking at the SLRs in the US, so the statutory liquidity ratios that the banks have to abide by. These were legislative changes that they brought in after the GFC in 2008 to basically, as a don't do that again, like don't leverage more money than what you have available. And they've basically just scrapped it. So, I mean, what does that...
Okay.
Again, like a lot of people haven't heard about this, right? Like this literally just passed, I think it's 60-day. I think there was like a period where the public could sort of vote against it or have sort of counter arguments against it. I think that was just passed last night now. So what you have there is, I think the ratios there were 5 to 6%. Now they've dropped to 3.5 to 4.25%. And what that looks like is an additional $200 billion in capital just freed up. So that's money that rotates back into the lending cycle side of things. Because again, if you read into the M2 narrative, it's all about refinancing of debt, etc. So if all of a sudden you've got more debt, it's like going on Bybit and saying, "Oh, here we'll let you go to 250x now," right? Like it's just being given more leverage to play with. Not to that extent, but like that's basically what's happening. I think that's what I'm looking at right now is more of a leading indicator, and then what I link that up to is corporate credit markets. So looking at well, that money is probably going to go to like if I'm saying that we're more likely to be in a growth cycle than a recession cycle, then we'd want to see growth assets show resilience. So seeing banking stocks move to the upside, that doesn't happen if there's a recession coming. I think that's a pretty good proxy. And we saw that in Europe already this year, which is a little bit ahead of the curve because they've been cutting sooner. And then I think afterwards, in the US specifically, we start to see rate cuts come. So that's probably the back end of this year again. So looking at some of the implied rates, September seems to be the consensus there. And it's looking to continue into Q1 of next year. So the M2 narrative, definitely solid, 100% works. But I'm probably looking for more of an edge over just looking at M2. So that's my understanding of probably what's changed in most recent times. That's probably going to add a little bit more fuel to the fire. And again, like if we're trying to work out, if M2 is a sort of leading indicator by, let's call it 90 days, that seems to be the consensus. What can we look at to also see when it's done? Like when is it overheated? So another thing we can look at is understanding the risk preference from the market when we compare treasury bonds. So people wanting to park money with governments like the US versus parking money with corporate entities that are looking to grow. So let's say like Apple or Nvidia or whatever. If there's more people willing to earn a higher percentage through seeing the growth of companies, well, that's people have a more high tolerance for risk, right? Like they're not interested in the dropping rates in US treasuries. So measuring just the differences there is key in understanding what does the risk appetite look like. And what that shows us is that the risk appetite is growing. It's not slowing down, and it hasn't even come close to plateauing. So I still think there's at least 6 to 12 months runway from here in terms of things having the ability to go into risk mode. And that's kind of good too, because obviously, we're talking about alt season's not come yet. Ethereum's not at new all-time highs. When you sort of zoom out and look at what are people doing in this sort of post-COVID era where things got shook up pretty hard, it seems like everyone's slowly getting back on the boat of being risk on. The whole market we're talking, not just crypto. And again, while that doesn't directly influence, well, it does directly influence crypto, but it's not a case of like, hey, this moves, so crypto moves. It's more of a everything kind of steers together kind of thing. And that's what I'm probably more interested in these days, as sort of just deepening my understanding there. Because coming from crypto, you kind of think you live in a bubble and, it's just crypto and nothing else. But reality is like you need people to feel comfortable out there and willing to give something new a shot like crypto. And that happens in that sort of risk on environment, I feel.
Yeah. Okay. No, that's awesome. Thanks for breaking that down.
Yeah.
Because that's a lot of info that, I didn't have top of mind in terms of all of the little things that actually make liquidity in the economy at a broad scale. That isn't just like, oh, well, this metric's up, so therefore people are going to ape coins, I guess. So that's really
it definitely helps. It definitely helps, and it is a little bit academic, but at the same time, I mean, there'll be other signs and measures. I guess what I'm sort of playing into the narrative of is rate cuts are coming, but I want to find something ahead of the curve to sort of understand what does it look like sooner. And so I'm looking at, if all of a sudden the banks can leverage more money, that's a pretty good sign, and that good times are coming. So
yeah, that's ideal. Now that we've looked at all those like outside of just M2 rate cutting factors, we have deeper liquidity in global markets. People have more money on hand. There's more, debt in the system, which is technically okay and a good thing because it means that there's more borrowed money. What do you think is one of the drivers, or many of the drivers, of retail interest in crypto again? Because this has been a very institution-led cycle at this point so far. Like all of the retail activity that we've seen, as we just discussed, has been these kind of like quick frenzies, blow off tops, people throwing money in, getting fucking destroyed, and then being like, Jesus Christ, no thanks. Meanwhile, Bitcoin has just been marching up. what do you think it is the switch that flicks that makes the person that's not in crypto sitting at home thinking like that they've seen Bitcoin now be rubber stamped by BlackRock as an investable asset that definitely isn't a scam. It's only taken, 15 years? But, you've got this institutional sense of like, this is an okay asset class to be invested in. Obviously, you go further out the risk curve once you start moving away from Bitcoin. And the second you get past like Solana, it starts to just become like, okay.
Yep.
But yeah, what is it that people are going to look to think like, oh, sweet, let's get involved in crypto? Because I feel like a lot of people are just going to invest in Bitcoin. Like my thesis is that like a lot of money will just stop in Bitcoin. People will just go, I'm allocating 1 to 5% of my port in BTC and leaving it. And that will be the lion's share of retail adoption.
That'd be awesome if that happens. Look, yeah, again, it's hard, I guess, just from personal experience and having conversations and just thinking about it logically too. I think you think about the people that are in crypto for the last couple of years, I feel like you kind of have a certain personality type. Like you probably want to be just in generally like a bit of you're happy to think outside the box. Like you're happy to just question why should I care about, money debasing? Like you say that word and people just go, whoop, don't care. Like most people don't even know how inflation works, right? So I do think once we see certain things fall into place, and I think they're necessary, really. Like consumer protections, like I think that's a big one. I know, like in Australia, like for example, in many other countries, like while exchanges operate, they do so in a way that while the products themselves aren't regulated, the companies themselves are accountable for the actions that they take. So if something does go wrong, you can action against them in the jurisdiction that you live in. But when we start to see those sort of market maker rules come in, we start to see how do we grade these as products? If, for example, if a token gets listed on an exchange, what's the provisions and why, how can it get listed? Because obviously one big call out is like we keep seeing a lot of meme coins rug pull. So, at the end of the day, are we happy with that? Is that how we want the environment to look like? And things like that scare the consumer off. It just makes them seem, I feel like, more like, hey, this is just not for me, right? Like they can't even look at Bitcoin because they're more tied up into what the media tells them. Like, hey, it's for criminals. It's fart coin. And yeah, rich person's just like, oh, look, fart coin's not for me. But then you get those people that like us that say, fart coin for me. So we'll take a look. But I do think just that maturation of the industry, I think more IPOs will probably be coming to the space, and that's going to draw some legitimacy as well. There's going to be some proxy investments that people will be making through their super funds that they didn't even know was happening. So like I would sort of point to stablecoins as being the biggest one there. I think if we're talking use cases, other than Bitcoin, it's stablecoins, which isn't sexy, but it actually solves a problem today and tomorrow. So I think once people start, and it might take something like stablecoins, like honestly, to actually get people comfortable with the idea of crypto. I sort of liken it to, everyone's got their PayWave on their phone. Like you go up to a terminal, you pay. You're not necessarily thinking about the tech. You're just more as a user consuming that as a service, and it's easy for you, right? So again, like what crypto unlocks through stablecoins is potentially the ability to earn like your interest in your bank account daily, and you get daily compounding. Like again, you're earning just a treasury rate, but you're potentially coming out ahead a few percent higher at the end of the year. So like that's a better use case. That's a better experience for a user, right? So all of a sudden you get people used to this idea of, hey, crypto is useful, and then they might start exploring things like Bitcoin, like maybe. But I think like removing that aside, like that's probably like a little bit further down the track. I simply think it just comes down to the market doing what it does best, advertise. So again, sort of point back to what I said earlier, we get to all-time highs. We saw it in Bitcoin too when the ETFs went live. Like we saw that flurry of activity when we started to reach those new all-time highs ahead of schedule. Like before the halving, everyone got, oh, what's going on? This is exciting. So I think it takes that to get it in the media, and people consume the media, and their friends will be talking about it. And just think about it. Like you go to Christmas or you go to a weekend barbecue party, like however the market did sort of dictates how you're going to talk about things. Like if crypto's down 40%, you're not talking about it. But if you're up 40%, you're going to, after 3 or 4 ciders, start talking to everyone about it. So there is just an innately human part of it as well. But yeah, I do think just fundamentally, but just that checklist, things becoming more and more legitimate. Like it becomes harder and harder to become an objector. I think that's what's coming probably over the next 4 to 8 years. I think that'll be what sort of gets us over that 50% threshold and get half the world into crypto.
Yeah, I like that phrase. It's like it's becoming harder to be an objector.
Yeah,
I think is yeah, like very directionally correct on this idea of like it's really difficult to look at it and be like, oh, it's all a giant Ponzi scheme. Like there's plenty of Ponzi schemes in there, but as a system as a whole, it's like, okay, no, there's legitimate assets here that do real things that you can point to and be like, not a Ponzi scheme.
Exactly right. Yeah.
Ta-da.
It will be interesting to see how people digest NFTs and things like that when they start coming back in vogue. Like, because it probably will happen, right? It's just not the environment for it. And everyone points to like crypto being such an awesome use case for gaming. Like maybe, but again, like if everyone isn't seeing Ethereum or Solana or AVAX, whatever they got to hold as the underlying token to interact with that game, like unless because you almost think about it as like a loyalty card, right? Like if I hold AVAX in my wallet and AVAX is going up, I can earn more AVAX by playing this game. Like I feel like everyone is drawn to it for that reason. I'm just thinking back to Axie Infinity, what that was like when that first started.
Well, this is the thing. Like gaming is one of those funny things where it's like if you speak to most gamers, they hate crypto because it got pushed so hard on them of like, you can own your assets on the blockchain. And they're like, we don't give a fuck. Like, I don't care that you can do this. This is not the novel tech that you're marketing it. So it just got pushed too hard on them. And I think the gaming community will take a while. I just think we need a fun game that has crypto in it. Like if someone can make a good one that has crypto in it, the token will go up. But for the most part, I think that they keep trying to design the games with like the blockchain bit at the forefront. And it's like, that's the wrong value prop. Make something that's really good and really awesome that people are going to spend a lot of their time on and then have crypto as a feature. Don't make it the sell. And that's the problem. It keeps being pitched as like, oh, trust me. I like Prime as like the gaming kind of token. There's like a lot of confluence there with like people that are in it. I think Mr. Beast's sister is an ambassador for it, which is a fun little known fact. And if they can deliver, it will be it's a huge if with games. But yeah, they've got like the whole AI stuff built in. There was a paper they released a year ago that was like they're more advanced than Google. Anyway, I'm shilling my bags way too much here.
That's all right.
But it is something that I'm still like, to balance it out, that I'm very skeptical on as a sector long term. Like I just think that until you get a breakthrough game, it's one of those things of like the GameFi stuff will continue to be these kind of like short little flywheel mega ponzi that rip up and then rip down.
Yeah, like you got to think of it really just first principles, right? Like if you want someone to buy Apple stock, Apple's got to be putting out good products, right? People buy an Apple phone, they buy the next Apple Watch. You get a portion of that revenue as a dividend, right? So until like crypto comes to a point where like that sort of exists in somewhat like you can make it just even just like it could be overcomplicating it. Like what if it's just instead of securitizing on a stock exchange, you just securitize on a digital ledger, right? And then there's revenue share through staking, so it kind of like not forces you, but it incentivizes you to lock in value so they can continue to build great games. Like there's nothing wrong with that sort of angle. I think people want it to make sense, and then you get people just going, oh, but you don't want to trade this inanimate object between 5 or 6 different games? Why not? Like, it's just too complicated.
Interoperability. It's like my least favorite word. Like, you can take your Grand Theft Auto car and put it in Skyrim. It's like, no one asked for this, man. Like, they're not going to do it. Also, you can't. A, you can't do it. B, no one wants it. So, like, just that's a bad binary to have. Of both of them are just no and no.
Yeah. Agreed.
Yeah. Back to the stablecoins thing. I think it's interesting in Australia because we have really good fintech. Like our payments are fucking great, and I kind of lived in this like bubble of being like, oh, I'm not sure about crypto as like the use case for like better. Sounds bad, but like almost like more seamless financial interaction. But then I like spent a couple months in Europe and traveled through the US and was like, oh, it's dog shit everywhere else.
One trip to New Zealand will do it as well. Yeah.
This sucks.
Yeah.
I was like, oh wow.
Yeah.
I did not realize until I left Australia for like an extended period of time
Yep.
and was like living in countries that I was like, oh, this is not good. Like China's got great fintech. I lived there for a bit.
Oh, really? Okay.
Yeah, they've got their WeChat app.
Oh, of course.
Just
Of course. Yeah.
does
Everything.
everything.
Yeah.
Literally everything. It's like what Elon Musk, I imagine, wants from X, the everything app. WeChat is just... Dude, there's shops with like facial recognition where it recognizes your phone and you can walk in, grab things off the shelves and leave and it will charge your phone. Like
That's
there's
wild.
no cashier. You just walk in. If you've got a WeChat set up with like your face set up on it, so the Chinese government has a copy of my face and so they're gonna they'll clone me or something in the next couple of years. But yeah, with the whole stablecoins thing, I do think that's right now like a very LinkedIn core narrative of like, oh my goodness, it's the best thing. But the IPO, there's an argument to be made for like an alt season in crypto equities when it comes to stablecoins.
That's,
like
that's a good way to put it. Yeah.
They're ridiculous. Like if you look at the revenue that Tether does, and they're not going to fucking IPO, but plenty of other companies like stablecoin protocols could, or new entrants to the market that go, holy shit, I can make a business around T-bills that people put vile amounts of volume through.
Exactly.
Okay. So, yeah.
And it is
makes
regulated in the US, right? So, I mean, first cap off the rank, it's just going to be, if we're talking like emerging growth sectors, like you can point to quantum, you can point to AI, like stablecoins is just going to be one of those thematics, I feel, just in the equities markets. So, it just makes sense.
Well, I mean, Circle was like a liquid 10x.
Yeah.
And everyone was clowning that as like, oh, it's launched way too high. And then it just phenomenal performance there. In the crypto equities side, I have one more like question on like fringe sector that might turn into something in a sec. But on the crypto equities side, you've basically kind of got an all-out battle between Coinbase and Robinhood at the moment. It's like the two majors. How do you see that playing out? Like, who do you think... Coinbase has a really great moat with Base, regardless of like user activity and price performance on like Base assets. They technically have a very, very good lever that they can pull with that. They've got their entire on-chain ecosystem. Robinhood does not have that, and yet they've just got an entire war chest of features, I think, and just a general user base that Coinbase does not have.
Yeah.
How do you see that playing out?
Oh, man. Like, I really don't know, but I mean, if I had to give some sort of guess there, like, again, like you pointed at it perfectly, like Robinhood knows how to do it, right? So, again, you've got the user base. If they're coming into the space, I expect they have like a pretty good angle. And again, like you say, they've got, Coinbase has got the moat with Base. But again, I feel like if you're thinking of the next wave of people that come in, I don't know if they'll necessarily jump to like L1s and L2s as like their first point, their first docking station. Like I feel like they'll get indoctrinated through some ridiculous 0-day option sort of product that Robinhood will come out with instead. So they can make 1,000,000% in 24 hours. It will be interesting to play out. Like that's all I'll say. I think Coinbase is obviously trying to make their mark on a global basis as well, and Robinhood, like they do have that presence too. But it's, I don't think they're going at it as hard as Coinbase is trying right now. Either way, I don't think. Again, they're both emerging markets, so well, not so much Robinhood. It's more established. There's probably more of a growth factor out there for Coinbase if they just end up in more jurisdictions than Robinhood does. Whereas Robinhood's just probably going to make the trading element just more desirable to go through them with all their wacky products, like you said. Yeah, man, I really don't know, but keen to see it. Either way, everyone wins. Yeah.
How do you feel about AI? We had a brief, just in terms of AI. That's a terrible way of framing it. But how do you feel about AI and crypto? Because there's that Venn diagram there where in December, I round-tripped a phenomenal amount of money in December on AI because I was very much of the mindset of like, holy shit, like we've actually finally got decent integrations here. let's go. But that meta died off very, very quickly. And I kind of then, retrospectively, I retrofitted this idea of like, oh, we are nowhere near the kind of tech and integration that you want to see between these two systems that would actually proliferate into real value in the market. That would make an investor think, holy shit, like I need to buy these things. How do you feel about that Venn diagram of AI and crypto moving into the rest of this year and then on probably like basically forever at this point? Like they seem like two sectors that don't necessarily get along with each other well at like a VC like infra level. I feel like AI guys and crypto guys are not people that talk to each other too much, but there is strong confluence between what these things can do. If we imagine AI agents needing to conduct financial transactions on the internet on behalf of entities,
that's
it's not going to get a bank account. It's going to use digital rails.
Yeah, and that's the use case that I have heard. Like, oh, you could give a bot a wallet to go and do your trading or your shopping for you. And my kind of thing to that is, do you want that? I don't know. Like, I get enough hallucinations just trying to get it to like give me some clips on what happened in the news, and it tells me something that I'm like, no, it didn't. So
Israel nuked Iran.
Yeah,
come
pretty
on,
much,
buddy.
right?
This didn't happen.
Really, I've got to write about this. Oh man, I don't know. Like the one thing I know crypto sort of attracts, and it does it every time, is it's just the epitome of speculation. It's the ultimate, I want to get here first before other people do, because this global capital market gives me access to this startup in Indonesia that has robotic fertilizing bots that I can't get on any stock exchange. Like I feel like they're the potential niche cases where it may open up capital flows into emerging tech. But again, oh man, like I'd love to see this place play out. Like we saw the AI agent thing, like you talked about. Like again, but do people want that, or are you being told that this is a theme that you need to jump into? Like I also don't. I admit that I haven't explored it probably enough to probably have an opinion to where it's going in the future. But the one thing I do know is that it's the perfect breeding ground for the speculation of long-term use cases, I feel. So if someone does nail it, or we do see like a version of what this could look like something useful, and blockchain fixes problem XYZ, like I think a big one will be like privacy and censorship. So like if there is this move to like, oh well, we'd rather have this democratic decentralized AI agent that's not filtered, or you don't have to keep your data in a web server, which I don't think that's possible. I think even through blockchain, you're still somehow storing it on some server somewhere. Yeah, I'm keen to see it play out, but I would 100% expect people to be speculating on new use cases for sure. Like we've seen a few, but I'd be keen to see what comes next. I wouldn't be surprised if something like robotics comes out, and again, it's just a way to access investment into robotics versus something actually tangible and valuable and useful. It's more the speculation that, hey, robots are coming, and this project
like
got robots.
A token for the robot.
Yeah, we have a Lego.
The one place where everyone will be collectively dumb enough for a small period of time to just be like, this is the greatest thing I've ever seen.
Tom, I think we've nailed it. We can get our robots project up and running. So,
dude, robot token. Here we go.
Yeah,
just buy this token, and you'll get a robot at some point. I don't know. Real world robots. Because that was the case in December when the AI agent stuff kicked off. It was very much almost like a price leads narrative of like the price went up so much that people went, myself included, wow, this has to be really good. And I was very like skeptical of it, but like behaviorally, like mentally I was skeptical, but behaviorally I was like, well, goes up like that, who am I to argue? They must be onto something. And
you have to have that attitude. Like if you've been in the markets long enough, you can't fight momentum. Like you will absolutely ruin yourself. So you just got to pick your battles, and again, just understand where people are putting their bets. And for sure, I would have definitely jumped on if I had the opportunity.
But it was that thing where like retrospectively I was like, oh wow, these AI agents are not advanced at all. These things are basically like binary option models of like, oh well, there'll be a thing, and it was just posting slop on Twitter and then potentially doing 2 or 3 things with a treasury of like, well, the bot invested in this, and it's just like it's one minor step up from like a bot pre-AI, And so, yeah, it really wasn't the revolution that we were promised with ELISA protocol and virtuals. That did
Yeah.
not.
I'm still hooked on what we saw last cycle. Do you remember that mouse that was on like YouTube Live hitting buy and sell buttons and trading?
Oh yeah, yeah.
Like, let's bring that back.
Trading animals. We need
Trading animals.
the
Yeah.
octopus that was doing the World Cup predictions. But
Yeah, that one too.
with coins, that'd be nice.
Yeah.
Mate, heading into the rest of the year, like for the next 6 months,
Yep.
can be longer, but just like as a general like 6 month kind of trend, what are you most bullish on versus most bearish on? And that can be an asset or an asset class. It can be broad as you'd like, or as narrow.
Bearish, like I'll start there. Like I really at this stage probably can't be bearish on anything. I feel like we're kind of at just the absolute curvature of like things probably turning to the upside. But once we get some upside movement, I'd absolutely be picking some things apart to say, well, this isn't going to go any further. So yeah, probably won't have too much to comment there, but like in the future, 100%, I'll put some things to shame.
Some overvalued tokens that you can find and go, oh.
Yeah, exactly.
Yep.
Most bullish on, honestly, meme coins. Because again, you talked about, like, I think one thing we've solidified in this conversation is, you know, we are wanting new people to come to the space. We just need, again, it's just a money thing. You need that money coming in. You need customers through the door. We also want like older customers getting confident in you know, seeing gains. And meme coins does that, and it does it very effectively, and it's highly marketable. People see it as get rich quick, which is the wrong way to look at it, but unfortunately, like, that's just going to be the mentality people have towards meme coins. Like, you can be strategic about them and find ones that actually do have decent fundamentals, which I know sounds like a bit of a meme in itself. So I still think whatever we've seen relative strength in now, we're going to continue to see that flow through. So yeah, that being meme coins, but even the likes of Hype, like that's another one I've been sort of eyeing off as well. And then even from a DeFi realm, like I have got eyes on Jito and Aave. So they're kind of things that I'm bullish on. And anything with an ETF, I feel like they'll just get back to this narrative of anything with an ETF. You just want to kind of be aware of.
I think, yeah. We're a few months away from like the spam ETFs coming through.
Yeah.
So I think that a lot of like funds have now put in their applications for like Solana ETF, Litecoin, XRP, whether or not these get approved. But I think we'll just have this like couple month period where everyone gets an ETF.
Yeah, and the one thing there, again, just to call it out, like meme coins have been defined by the SEC as not a financial product, so they could be first cab off the rank. So again, getting people into the space, they'll get a taste of meme coins first, but then they might go to like DeFi and sort of run out the risk curve, which you could argue meme coins are probably really far on the risk curve, but it just, again, you get to this, I think, mentality where people win on Bitcoin and ETH and Sol, and they'll put that into something else and win on that and put that in something else, and that's kind of when you can start to pull apart projects as being overvalued, I think, when we're sort of at that second or third transfer of value. Yeah.
Well, I mean, for the most part, meme coins, they cop a lot of shit, but for the most part, they're just leveraged beta of like the underlying.
Exactly.
Of like, if you want better exposure to Sol, you can buy Filecoin. This is not financial advice, by the way. Anyone that's like, Tom said it was leveraged beta, and it's down 90%. I'm like, sorry guys, but yeah, if you want to buy, if you want a leveraged play on ETH, you go buy Mog or Pepe.
Exactly.
And you're just gonna get like, and it was one of the most like obvious trades in hindsight. But like when ETH finally did rip towards the end of last year, Pepe, and it was like, oh yeah, of course, the premier meme coin of ETH was gonna, 10, 20x on top of ETH's gains as ETH runs. It was just one of those like, nothing for 9 months and then.
Yeah.
So yeah.
I think that was the question, right? Was it just what was bullish for the next 6 months or 12 months?
Bullish for the next 6-12 months. That was basically it. So
yeah. Only other thing potentially like
bearish nothing, bullish memes. Fuck yeah, dude.
Bearish currencies. So yeah.
Bearish currencies. Why is that?
Yeah. Just fiat debasement. Like if we are going to see growth that comes at an expense, like it's like people get this idea that inflation's bad. It kind of is a way for monetary policymakers to regulate what people ideally should be doing. So, there are periods where it's beneficial to go out and borrow against your money and go and grow a business or expand into a different territory or buy shit coins, versus periods like we've just come out of, right? 2022, a more restrictive environment where cash was not plentiful and it was more of a onus to stop spending so we could get inflation down. So again, you just got to look at the data to see that we're at a pretty key inflection point here, where we're going to see inflation start to rise up high, whether people like it or not. It's going to happen. So you just got to play the game accordingly. And that game for a lot of people right now is buy Bitcoin.
That is, like, whenever people ask me, what do I buy? I usually say, like, don't. And then if they're like, no, I really want to get into it, I'm like, okay, like BTC and just forget about it. Like, put some in each week, each month, and just leave it there, unless you're going to spend a lot of time trying to learn about this.
Totally.
So, yeah. No, that's a really good roundup of just basically bearish fiat, bearish nothing in crypto, bullish the leverage beta to everything. Let's go.
I want to be bearish something in crypto, but I just need a bit of time to see what it's going to be. So
there'll be time. Give it a month.
There'll be time.
There'll be mid-July. I'm sure there'll be plenty of stuff that we can go, that's too much.
Yeah, I think that's a good timing, to be honest, because we've got, I think, the working group committee in the US. They're going to make that recommendation. So I wouldn't be surprised if the market gets a bit ahead thinking the whole industry is going to be regulated, and it may not be. So, yeah, that could be an interesting time, pre-August.
Yeah. No, awesome. Mate, Pav, thanks so much for coming on the show. Dude,
No,
really appreciate it. You've broken down a lot of stuff that you've given me, like, a lot of new info to go check out, especially around, like, Bitcoin and just macro stuff in general. I'm like, okay, great. I'm actually going to take notes for my own podcast. It's nice when I get to do that. So,
Happy to. It's always just good to chat, so it's good.
Yeah, man, awesome. Mate, where can people go to find you on socials? And have you got anything that you want people to go look at that you've got coming up in the future?
Yeah, I'm trying to be more active, but Twitter or X is the best place, so at Pav Hundal, Hundal. I've starting to be more active on Substack as well, just breaking down some of these more longer term and macro theses. And as much as I hate it, I'm trying to do the Instagram thing as well, but I'm not going to plug that just yet because I'm trying to work it out. So yeah, just come check me out on Twitter or X. Yeah.
Okay. Awesome, man. All right. I'll include links to those in the show notes. So we'll get those sorted for listeners and viewers to go check out. But mate, thanks so much for coming on the show.
Thanks, Tom. Appreciate it.